This is the Asia Trade. I'm Shery in Tokyo.
And I'm Annabelle Drulers in Hong Kong. The top stories this hour.
Are we in for a sustained trade war with China?
Well, you're in one now. Look, we have 100% tariff. If we didn't have tariffs, we would be exposed as being a nothing. We would have no defense.
Mixed messages from the White House as President Trump declares a trade war with China, while the Treasury Secretary suggests a longer pause on higher tariffs. Asian stocks set for gains as volatility lashes markets, with investors trying to gauge the scope of the US-China trade tensions. Plus, Wall Street banks haul in more than $15 billion in third-quarter stock trading, with Morgan Stanley leading the pack.
Take a look at the staggered open across Australia right now and keep an eye on those miners given the ongoing U.S.-China trade spat. We already see some really early moves when it comes to the Aussie bond space, a little bit of downside pressure ahead of the September jobs numbers out in the next hour. We're also watching JGBs in today's session after we saw that solid demand coming from the latest JGB auction, of course, the first one after the collapse of the ruling coalition. And given that collapse, we are seeing some uncertainty over Sanae Takaichi's premiership, and that really leading to some of those unwinding trades when it comes to the Japanese yen and a little bit more support against the Takaichi trade. So we're seeing the Japanese yen at that 150 level against the U.S. dollar, but still very close to that 151 level. And we're keeping an eye on those Japanese banks. We could see some upside after solid earnings from Bank of America, also Morgan Stanley in the overnight session. We are also going to keep an eye, of course, on those chip makers, given the ASML rally that we saw in the overnight session over its really statement that they are expecting to see more demand for their products. We had the Philadelphia Semiconductor Index also gaining ground to that 1 week high. But given the ongoing trade spat, we keep an eye on the offshore yuan at that 712 level. A little bit of upside in the overnight session as well, given, of course, that we had seen a broadly weaker U.S. dollar, Bell.
Yeah, Shery, you mentioned what we got from ASML, and it's certainly really a big change of tune for the CEO there from what we got in the guidance 3 months earlier. But as you said, it was that story around the SOX index. You can see that jump of 3%. And lots of earnings also playing into the equation from the bank side as well, because we had Morgan Stanley, Bank of America, both of those seeing solid results. And so it really feeds into a pretty strong start for the earnings season in the US. Two-year yield, we continue to track that as well. That rally has been stalling a little bit, but the two-year yield is still sitting around its lowest now since 2022, and watching stocks broadly because we did see them climbing, but also whipsawed in trading as well, because we saw it gaining as much as 1.2%, falling back into the red. So investors, again, still trying to digest these trade headlines, but also just some breaking news crossing the terminal. So let's recap this one as well. It relates to the poaching that we continue to see in Silicon Valley. So we know that Meta has been spending billions of dollars on an effort to recruit the top AI talent in the market. Now we have Apple's head of a ChatGPT-like AI search effort is leaving for Meta as well. So Ke Young was really just in the position for several weeks, but he is leaving for Meta. He had been appointed to head up a team called Answers, Knowledge and Information, or AKI, and that is the group that's developing features to make the Siri voice assistant more ChatGPT-like. So it is quite a big blow for Apple, and we know, of course, as a company, Shery, Apple is seen as being a laggard in the AI space.
Yeah, and we continue to watch, of course, the ongoing trade war as well, with President Trump now saying that the U.S. is locked in that trade war with China, and without tariffs, the country would be exposed as, quote, nothing. Trump spoke after Treasury Secretary Scott Bessent floated a longer pause on high U.S. levies targeting China to resolve a conflict over critical minerals.
Right now, we are currently in a 90-day roll on the tariffs. So is it possible that we could go to a longer roll in return for a delay? Perhaps, but all that's going to be negotiated in the coming weeks.
Let's get the latest with senior editor Derek Wallbank. Derek, where are we in these conversations when it comes to potential pause in tariffs?
Well, look, I think everybody's putting an awful lot of stock in a potential meeting between Trump and Xi Jinping coming up now in just a couple of weeks. I think that's really where all of the attention is focused. And look, you can call this whatever you'd like to call this. You can call this a conflict, a trade war, a point of consternation, whatever you want to call it. But the simple fact of the matter is that the U.S. and China have been going at each other in some form on trade policy in a really serious way since about 2018, right? January of 2018, when Donald Trump put tariffs on washing machines and solar, and announced that sort of action. So this has been going on for a long time, and we're right now walking up to this critical meeting that's going to happen, or we all think is going to happen. And we're seeing this escalatory process between the U.S. and China. It's stopping purchases of soybeans on the Chinese side. It's threatening cooking oil imports on the American side. It's threatening to ratchet up tariff levels to levels that some would call decoupling levels. Potentially as soon as November. And all of this stuff is sort of, you've got distancing happening, but you've also got threats of even more on the horizon with, as I say, the one exception of this Trump-Xi meeting that is supposed to happen. And so there's a lot of eggs being put into that one basket. I think, if you listen to Scott Bessent, if you listen to Jameson Greer on the American side, and as people should, because they are, the two biggest U.S. officials in these talks all the time, they are constantly projecting a positivity coming out of here. Bessent talking about a path forward, ways to delay or even do away with some of these things. But you're going to have to see at that meeting between Trump and Xi, you're going to have to see a real pullback on both sides because there's a lot at stake in this.
Yeah, absolutely, Derek. And we're also have seen the Trump administration applying pressure has been to India and its continued purchase of Russian crude. But now we hear, or at least from the Trump administration, we're hearing there's been progress on that front.
Yeah, it's going to be really interesting to see what happens when New Delhi wakes up and comments here. But Trump was suggesting that Narendra Modi had told him in no uncertain terms that India was going to stop buying Russian oil. He said that had not yet happened, but it was something that was on track to happen in the coming however long it would take to actually execute that. Now, again, let's see what the details are of this, but Trump put that comment out. It got an awful lot of attention. And there's a couple of ways that gets attention. Look, Trump is trying to find ways to pressure Russia to abandon its conflict in Ukraine. He's hosting Vladimir Zelensky at the White House later this week. So there's that side of the play there. On the other side in India, India's been subject to a special level of tariff from the United States, a higher level than most, and this purchase of Russian oil has been the linchpin that the United States has cited. So if there is actually a move to get rid of that, you could potentially see some tariff relief on the horizon. Let's see what the details actually look like.
Our Bloomberg senior editor Derek Wallbank there with the latest on the ongoing trade negotiations. Despite the uncertainty, our next guest says that further upside in Asia equities is expected. He's overweight China, Japan, and Korea. Let's bring in Tim Moe, Chief APAC Regional Equity Strategist at Goldman Sachs. And always good to see you in the Tokyo studio.
Great to be here, Shery. Thanks.
So what will be the key drivers here of the Asian equities gains that you're expecting, given that, of course, we're seeing the exuberance in AI, but we're also seeing potential Fed rate cuts? What are the main drivers of the upside?
Sure. So as you just correctly said, we think that structurally that there's further upside for Asian markets, and we just raised our numbers a few weeks back to reflect that. I think there's really four main things. One is that the macro backdrop is favorable for equities. By the way, probably globally, but we're talking about Asia right now specifically. In particular, we've got Fed easing and we've got likely further dollar weakening against a backdrop of continuing good growth. And that combination of factors is typically supportive for equities, and we've got a lot of episodic evidence and some modeling evidence that would support that. So that's number one. Number two, the environment is supportive of higher valuations. We've seen that in the U.S., and the U.S. tends to set the benchmark for global valuations, so it's kind of helping everyone else achieve a higher pricing level. Number three, we're looking at earnings growth to accelerate somewhat next year from 8% this year for the region to 13%. So markets kind of like that improvement in growth. And the fourth thing is that even though foreign investors have come back to Asia in the last 6 months as markets have rallied significantly, they still have not even recovered all that they sold in the year before. So I'll give you just one set of statistics from the middle of last year to the low in inflows into Asian emerging markets. There's about $100 billion of net sales. And since then, there's only been $40 billion of net rebuying. So people have really not even recovered what they had before. And the combination of all those factors, we think, is still favorable for equity.
Which means the valuations overall, especially to your point that we might be playing catch-up to the U.S., is still favorable, despite the fact that we're a little bit jittery that it might have gotten a little bit overstretched on the U.S.
Well, absolutely. And this is really the nuance here. And I'm not sort of saying, two things, being the proverbial two-handed economist. But I think the key message is that the structural trend is one which we think is still favorable. But markets have done a lot of work in a short period of time, up nearly 40% from the low in April until just the recent high. So they kind of overstretched what that fundamental trend line might be, which says that they're then vulnerable to some sort of trading correction and so forth, which could be catalyzed by news such as the U.S.-China trade friction, by the Takaichi news here in Japan. So these are all events which have catalyzed some sort of volatility in markets. But we think the key message is that as long as there's not major negative coming up in terms of these geopolitical issues, that equities should be able to make further gains.
How much of that is driven by the AI exuberance? Because I know that you like China, Japan, and South Korea, of course, tech-heavy, and we do have the domestic AI plays within China as well.
Of course. Great question. So we have a really cool chart that we've done which shows the percent of each markets, those key Northern Asian markets, what percent of that gain for the aggregate market this year comes from AI. And for Taiwan, it's 90%, because Taiwan is super heavy with TSMC and others. So 90% of Taiwan's aggregate 30% gain comes just from the AI area. For Korea, it's about 2/3. For China, it's over half. In Japan, it's about 45%. So AI is definitely part of this whole story.
Tim, we had a Bank of America survey out earlier this week, and it said that the majority, I'm going to say slim majority of respondents said that there's an AI bubble underway. Do you subscribe to that theory at all?
It's a great question, Annabelle. And our global strategist, Peter Oppenheimer, just published a timely paper on this, arguing that we're not in an AI bubble, yet. So the idea, without going into too much detail, is that there are many understandable reasons for concern which parallel some of the phenomena in, say, the late 1990s with the U.S. tech bubble at that time, Internet 1.0. But we also argue that there are significant differences, which include the fact that you've got greater industry concentration at an early stage. You've got companies that have very strong balance sheets, that have very strong cash flows, and also you've got very strong underlying growth in demand for the overall AI story. If you think that's going to be, quote unquote, the operating system for the world, there's a lot more investment that needs to be done than what already has been done. So our point is to say, look, we are aware that things are frothy and appear stretched, but we don't think it's yet in classic bubble territory. So we do think that there's more to go overall.
Yeah, and I guess on that point around the valuations, it plays back into your preference as well for China in some ways, because valuations there are far from looking stretched, even with the recent run-up in stock prices. What do you make, though, because you mentioned geopolitical tensions earlier, but just returning to that idea, we have seen outflows, for instance, from major US ETFs that track Chinese equities. How much conviction do you have in the strength of what we're seeing?
Well, the bottom line is we do have conviction, but of course we need to be sensitive to what the news flow is. Now, in the extreme, if there's just, if the U.S. maintains 100% tariffs on China and China doesn't back off from all the extension of its leverage in terms of rare earths and so forth, then obviously it's going to be a much more fundamentally negative environment. I think that there's an argument that both sides are trying to create leverage in advance of the negotiations that are taking place. So I think it would be premature to say that the super negative case is the base case. We don't think that is true. So getting back to your point, if we have China still trading at 13 times earnings in round numbers, and by the way, Korea is trading at 10 to 11 times earnings, these are not absolute valuation levels that are excessive, either in absolute terms or relative even to their own historical trading ranges. And so if we think that the underlying case that I was making quickly with Shery in terms of further growth and investor-like positioning and valuations that have still not fully reflected all that potential, then we think that equities over time can continue to move higher.
And since we don't know, of course, the outcome here, how do you want to position then? Are there any sectors that stand out to you over others?
Oh, absolutely. So we've lots of ideas. In China, just to rattle a few off, there's obviously the AI-related stocks. There are Chinese companies that are dominant in their domestic market, kind of the industry leaders that are then gaining market share in emerging markets. That's a kind of going global theme where they're not running into the same kind of tariff concern as if they were focused, for example, in the U.S. or Europe. We've got a number of aspects of domestic consumption, which I won't go into any great detail. And then there's a theme which we are really, really positive on across Japan, China, Korea, and Singapore, and that is the improving returns to shareholders through greater dividend payment and stock buyback and kind of improvement in corporate governance, which is taking place. So there's a lot under the surface that you can do, and one of our key messages is that whatever beta expectations you have, which is really the amount you think that the overall index can go up, we think there's lots of alpha opportunity, which is areas to outperform, some of which I've just mentioned.
To your point on Japan, we're now getting the latest headlines that the Ishin party leader, Innovation Party leader, Fumitake Fujita, will actually be meeting with Sanaya Takaichi later today. And of course, we know the horse trading is going on right now in order to get to that parliamentary vote. That upside that you expect with the improvements in alpha, corporate governance, and so forth, will that be enough if we continue to see political turmoil here?
I think we need to see things calm down before the market moves up. And this gets back to my point that if your sort of fundamental trajectory is positive, but markets have overextended in the short term, they're then vulnerable to some sort of digestion of those gains. That'd be perfectly normal. We have a new model we introduced which actually quantifies that. It says that the risk of a sort of a moderate correction is actually quite high right now, although the risk of a severe one we think is quite low. And there's reasons why that's the case, which I can go into if you wish. But the punchline is that if we have some political uncertainty, it's sort of a natural catalyst for people to take some money off the table. We think that if things settle down, and we think, judging from what we understand about, first of all, Takaichi's programs and then the potential opposition ones, we think that the difference in terms of Japan's fundamental fiscal and monetary policy is probably not going to deviate too much. And we think that the motion is the trends are very clearly in place to continue to encourage Japanese companies to perform better, to deliver better ROEs, deliver better dividends to shareholders, and better buybacks, as well as deconsolidating their cross shareholdings, et cetera. So all that still we think is fundamentally constructive and is something that we think markets will reflect in due course.
Timo, good to have you here in Tokyo with all of your views across markets and, of course, here in Japan, Chief APAC Regional Equity Strategist at Goldman Sachs. Coming up on the Asia Trade, more on the U.S.-China trade tensions with UC San Diego School of Global Policy and Strategy. We talk market strategy with BlackRock Investment Institute. Also, UBS joining us to preview TSMC's third quarter earnings. More ahead, this is Bloomberg.
Taking a look at Japan assets this morning, we've got Nikkei futures pointing to some modest gains at the open, so would track what we had on the Wall Street session overnight into the close, even though we had a lot of volatility, and that is also expected to follow into the session today. Bond yields as well to keep an eye on, because we had the 20-year auction yesterday, and actually the demand for that held up, despite, of course, all of this political turmoil. But what analysts are saying is that really out of either outcome, Takaichi, Tamaki, that we're hearing this main opposition candidate that could be forming. We're likely going to see more government spending and pressure on the BOJ to slow its path of easing. But let's get more on that story now, because Japan's ruling party leader, Sanae Takaichi, has called on the leaders of an opposition party to back her in a parliamentary vote for Prime Minister. It's the latest in a flurry of political negotiations following the shock collapse last week of Japan's ruling coalition. Let's bring in economics and government reporter Yoshiaki Nohara. Yoshi, thanks very much for joining us this morning, and lay it out for us, because from an outsider's perspective, this is certainly has a lot of twists and turns of what's going on domestically in Japan's political situation.
So right now, two main tracks of negotiations are happening. One is the between the Takaichi and the party called Ishin, Japan Innovation Party. Its co-leader is set to meet Takaichi this afternoon, and they are in policy discussions. If they agree on major policy agendas, then the Ishin would agree to vote for Takaichi 4 p.m. But at the same time, you're seeing that Ishin is also involved in other discussions with two other major opposition parties, DPP and CDP. And so they're in really, they're playing a key role here to decide who is going to be the next leader of Japan. And it's really tenuous, and the situation is very fluid.
I mean, this has been a very surprising development, especially given that, of course, we don't know when it comes to the trajectory of opposition parties, how disorganized they've been. But could they really have a shot this time around of actually getting a new prime minister?
So they may have a good chance to select the new prime minister out of their camp, but whether it's going to lead to the long-term stability by controlled by non-LDP parties, it's still unknown, and there's still a lot of doubt whether they can have enough, the consensus on the key policy items, and that is going to be the key to see whether they are going to be able to achieve stability this time.
What's next then, Yoshi? Because, of course, we're looking ahead maybe to a meeting next week, but what happens between now and then?
Right. So we got they agreed that they're going to have the extraordinary parliament session is going to start next Tuesday, October 21st. But there's no guarantee that the vote for prime minister is going to happen on that day. But at the same time, you have to understand that when the parliament session will start, but that's clearly moving on to the next stage. So chances are they have to agree on what they're going to do for premiership by the end of Monday. So from now and until then, we're going to see a lot of discussions happening, to decide on that key, to make that decision among parties.
Yeah, especially if they want a new prime minister when President Trump actually visits Japan, right? Bloomberg's Yoshiaki Nohara there with the latest on the ongoings in Japanese politics. We have more ahead on the Asia trade. This is Bloomberg.
We're setting up for some volatility across Asian markets today. We did see that on the US session overnight. US stocks eventually closing higher, but fluctuated throughout the session. Australia just online, nearly 30 minutes into trade. We're seeing rare earth stocks in particular under pressure. And Shery watching Japan very closely, given all of the political turmoil that's ongoing there.
Yeah, and the implications for JGBs. We're also watching Australian bonds at the moment under a little bit of pressure early in the session. We do have the September jobs numbers, the expectation for a slight rise to 4.3%. We also had some RBA officials commenting with Governor Michelle Bullock talking about tight policy, but not necessarily by much. We have more ahead on the Asia trade. This is Bloomberg.
Taking a look at rare earth stocks this morning in Australia, these are trading mostly to the downside. That is after the US Treasury Secretary Scott Bessent said that China tariffs could be delayed in return for a delay on rare earth export controls. So that sent them under pressure in the Wall Street session. And again, that's translating across into Sydney so far, 30 minutes into trade. The main headline coming into today is that Donald Trump has said the US is in a trade war with China now, and essentially that ratcheting up of tensions that we continue to see really on both sides. But joining us now is Susan Shirk. She's research professor at UC San Diego School of Global Policy and Strategy. She previously served as the U.S. Deputy Assistant Secretary of State in the Bureau of East Asia and Pacific Affairs. So, Susan, thanks very much for joining us. And we've been really questioning this week this sort of moves that we see on both sides. Is it just posturing? Is there more to it? And what does it mean if we do get this meeting as well on the sidelines of the APEC summit later this month?
Well, this is really a good moment of opportunity for U.S.-China relations because we have this meeting scheduled in 2 weeks at the margin and kind of informal agreement that over the next year we might be able to allow time for diplomacy to work in preparation for exchange of the leaders' visits, with first having President Trump go to China and then President Xi go to the United States. Up until now, there has been remarkably little working level real diplomacy and preparation of deliverables for any of these phone calls or meetings. So we really need to extend the truce as long as we can and to give some breathing room for diplomacy between the professionals to work.
Do you think, though, that there's been enough preparation for the meeting? And do you think then, as a result, we can really get anything substantive?
No, I'm pretty pessimistic about this upcoming meeting because, as I understand it from the two sides, the Chinese side is really fixated on making sure that their leader is treated well, there are no surprises, no media embarrassments, and they just want to make sure that he's happy with how everything looks. And on our side, we have a personalistic leader who hasn't really shared with his subordinates what he really wants to get out of this meeting. What are the goals in terms of stabilizing the economic relationship? And is he willing to give up the tariffs, say the fentanyl tariffs, in exchange for the Chinese recommitting to their enforcement of the law enforcement management of the fentanyl precursors and purchases of soybeans? That's a really neat package there of those three things that could, from my perspective as someone who worked in government and did these negotiations in the past, I don't think that should be that hard.
But that's the thing, Susan, right? I mean, nobody has a clear idea of what President Trump wants in any trade negotiation going around the world. And it seems that the goalpost keeps moving. So what's the incentive for China to actually engage in constructive negotiations when things can always change because of how mercurial President Trump is? And if this is the case, how much longer can both sides stay on hold with things as they are?
Well, you're asking all the right questions. And in the 6 weeks that I've been in China now, I do hear from a lot of people skepticism about whether or not it's really worth making commitments, making compromises with President Trump, because they never know how long he will stick to his side of the bargain. But the professionals in the government are still intent on trying to do that. I mean, they haven't given up by any means. But they are frustrated by their inability to figure out who are their counterparts on the U.S. side, who are the professionals with whom they should be speaking. and the fact that nobody's gotten on an airplane and come to Beijing to have those preparatory talks.
Given the ongoing situation, did it make sense for China to up the ante when it came to rare earth minerals? Because at the same time, this could backfire in the international stage, right? I mean, the U.S. is already talking about coordinating with other G7 powers. Could this just mean a signal for the rest of the world to start building alternative supply chains?
Absolutely. I mean, that effort is already underway. And I think the Chinese side overshot in this delicate bargaining by announcing what is really a global, expansive licensing regime, which would require companies from every country in the world, not just the United States, to request a license from Beijing. We saw when they issued an earlier, much more well-defined, smaller licensing regime, how bureaucrats in China right now are reluctant to do anything that might get them in trouble. So they drag their feet. It can take a long time to get those licenses. Plus, it gives Chinese decision makers the ability to manipulate the approval or disapproval of licenses depending on how governments from the other countries, what their attitude is to China at that moment in time. So I don't think it's sustainable. I don't think this regime is sustainable.
Right.
They will have to modify it significantly or abandon it.
Susan Shirk, always good to get your insights. Research professor at UC San Diego School of Global Policy and Strategy. In fact, we'll have more discussions on trade and broader geopolitics later today. Don't miss our interview with Canadian Foreign Affairs Minister Anita Anand at these times on your screen. This is Bloomberg.
Well, Apple's been hit with another high-profile exit from its AI division, with the executive leading its Siri search project leaving for Meta. Bloomberg's Mark Gurman broke this news and joins us from Los Angeles now. So, Mark, thanks so much for making the time. And, yeah, another great scoop on Apple. But let's just talk about that executive in question, why he's leaving to Meta, and does it point to issues at Apple and what's happening with their AI efforts, or does it just also tell us what was on offer at Meta was just substantially better?
Oh, it's certainly both. I mean, the Apple AI project has been bleeding talent for months, if not longer at this point. Their foundation models group, which is in charge of developing the underlying technology for their AI system and for Siri, they are probably going to lose the vast majority of people in that team. Meta has been coming in with substantial offers, salaries worth north of 20 to 30 or even $40 million per year, all things considered with stock compensation and bonus and relocation and what have you. But now we're talking about the upper ranks of the actual AI division. Earlier this month, Robbie Walker, who used to run Siri and then became in charge of this AI search and ChatGPT-like project, he departed. His replacement is Kei Yang. That's the person who I reported just a little bit ago who is now departing Apple. So he was promoted to this role running the project just a few weeks ago, and now he's already leaving. And I'm told he'll be starting at Meta sometime next month.
Why can't a massive company like Apple hold on to its talent? What's going on?
Well, in this AI landscape, things move fast. You break things, you push out new products, and Apple's reputation in the AI industry has made it difficult to retain talent, as well as bring new talent in. The big offers coming in from other companies are very significant and substantial, and it's very enticing to those people as well. And there are concerns about what the future is of AI at Apple, given how fast the competition is moving. We saw earlier today in the U.S., they rolled out their new M5 chip, new Vision Pro, MacBook Pro, and iPad Pro. They're really touting these as AI devices. But here's the problem. They don't have their own AI services or AI applications to really take advantage of that hardware. And it doesn't appear that they have anything significant on the roadmap that will really make the most use out of that hardware. And so you sit back and you recognize this. If you're an AI leader at the company, you say, we're not doing great things. Our reputation is in the toilet. And I'm being offered 4 or 5 times the salary from a company that I think is actually doing great stuff. It's not a hard equation to solve for a lot of these folks.
Mark Gurman, Bloomberg's consumer tech managing editor, there with the challenges from Apple when it comes to its AI development. And of course, it's really all about the artificial intelligence frenzy. Dutch chip equipment maker ASML now saying that demand for its most sophisticated machines is soaring thanks to the AI boom. That's fueling optimism across chip makers and their suppliers. That's as we get also TSMC's results later today. The premium on its U.S. traded ADRs now at a 20-year high. Watch those chip equipment stocks in Japan and Korea at the open. Investors weighing the impact of overall bullishness around AI against the volatility, of course, of trade policy as well. Let's bring in Bloomberg Intelligence senior industry analyst Masahiro Wakasugi. So let's start with ASML. What's going on there?
Yes, maybe, if we look at the ASML earnings, and the most important part was, I think it was the order bookings. And the total order booking was around 5.4 billion euros. And that was, better than the consensus, and of which 2/3 were coming from the, EUV tools, which means that the demand from the, most advanced technology is quite strong, meaning that maybe AI demand is kind of impacting ASML demand at this point. So that was a good point. And also the company is saying that 2026 revenue would be higher than 2025. And people were a bit concerned about the too strong demand in China. And now the company is also admitting that demand in China could significantly decline next year. But despite that, the company is pretty confident about achieving the revenue growth next year because of the strong demand. That is pretty relieving. And in the conference call, the management looked pretty confident, and maybe they are seeing a quite good demand, not already, but should be coming from not only NVIDIA but OpenAI, Samsung, SK Hynix, this kind of Oracle project. That should be the pretty good situation for the company.
Yeah, it's really quite an interesting turnaround, because just 3 months ago we had the CEO of ASML walking back his forecast that sales will grow into 2026. So what else stood out to you in the call?
Probably we think that maybe the company is seeing that the overall tech situation, and we are seeing the strong revenue situation. For example, like TSMC is reporting the strong monthly sales, and meaning that the demand from not only NVIDIA but also Apple should be quite strong. So maybe TSMC would be keeping their capex, and so meaning that we are not only hearing the strong demand from China. Maybe the demand could decline next year, but in the past few years the demand was pretty strong in China. But we are actually seeing that the potential demand increase for the equipment for AI going forward. So probably that will be giving the ASML management a quite good confidence about the future demand.
So, yeah, you mentioned TSMC, the earnings that are coming out. So what else are you going to be listening out for in the earnings call? Because, of course, we've got a lot of questions around access to rare earths. We've got currency implications. We've got the outlook for margins. What's going to stand out to you?
Yes, so from the equipment maker's point, probably the company could achieve a strong revenue growth for next year. And now consensus is expecting some kind of 18% revenue growth for the 2026. And a year after 2027, consensus revenue growth is around 20%. So from the equipment perspective, if they can achieve the strong revenue growth, the chip making equipment demand should be growing in the similar pace as TSMC's growth. So in that sense, we would like to see how confident TSMC's management is at this point when they report their earnings.
That was Bloomberg Intelligence Senior Industry Analyst there, Masahiro Wakasugi. And let's also get more on what's happening on the corporate front, because investors led by BlackRock's global infrastructure partners are buying Align data centers in a $40 billion deal. Macquarie Asset Management is selling the Texas-based company, which operates more than 120 campuses and data centers in the US and South America. GIP's partners in the biggest data center deal to date include Microsoft and also NVIDIA. The US FCC is moving to block Hong Kong-based phone company HKT from domestic telecom networks, citing national security concerns. In a statement, FCC Chairman Brendan Carr says the Commission will continue to safeguard US networks against penetration from foreign adversaries like China. The carrier is controlled by Hong Kong-listed PCCW, whose largest shareholder is billionaire Richard Lee. Bloomberg's learned that Anthropic has held early funding talks with Abu Dhabi-based investment firm MGX. Sources say its CEO met with MGX during a visit this month to several Middle East nations. In September, the OpenAI rival raised $13 billion in a funding round that nearly tripled its valuation to $183 billion. We'll have more ahead on the Asia trade. This is Bloomberg.
We're getting the latest lines from the Finance Minister of Japan, Katsunobu Kato, talking about the G7 coordinating on China rare earth countermeasures. He's saying that he has confirmed a joint response to the measures taken by China on rare earths. He's also commenting about FX moves, especially noting the weak trend on the Japanese yen, saying that they will need to watch excessive, disorderly FX moves, and that it's important that the currency moves are stable, reflecting the fundamentals. Of course, we have continued to see weakness on the Japanese yen against the U.S. dollar, although a little bit more support in the overnight session. We're also getting the latest breaking news out of Japan on core machine orders month on month, a contraction of 0.9%. The expectation was for a marginal gain, and also continuing the contraction from the previous month. On a yearly basis is also growth that has really disappointed to the downside of only 1.6%, decelerating from the previous month as well. The expectation was for growth of around 5% or so for the month of August. So we're seeing some downside when it comes to those core machine orders, perhaps an indication of where capex and really what corporates are doing in Japan is headed, Belle.
Yeah, let's also take a look at, Shery, how the markets are faring, because we are just looking ahead to the opens in Korea and also in Japan, and you are setting up for some upside in the session today, even though we saw quite a lot of volatility overnight on Wall Street. So investors still digesting trade tensions, of course, expectations around Fed easing, but also the outlook for earnings. And overnight as well, we had, yes, ASML, we're looking ahead to TSMC later today, but we also had the banks continuing to report their figures. And what we've seen in aggregate is that the biggest Wall Street banks have delivered a banner quarter for stock trading, together hauling in more than $15 billion in revenue. That is the highest for the third quarter in at least 5 years, with Morgan Stanley leading the pack, generating $4.12 billion. Let's bring in our Bloomberg Intelligence Senior Industry Analyst, Matt Ingram. So, Matt, yeah, I mean, it seems strong results across the board, really, but it also plays into, I guess, what we've seen in terms of stock market activity as well.
Yeah, g'day Annabelle, g'day Shery. Yeah, look, it's interesting, Annabelle, at the risk of sounding like a footy commentator, it's been a year of two halves. The first half was all about volatility on the back of US tariffs. Confidence has returned in the second half. We've seen that big AI trade boosting markets, but we've also seen a big uptick in hedge fund activity in that stock lending business, which was really strong for these US banks in that quarter. So it's more about confidence now. It's more about looking forward. It's more about investing. The first half of the year was about fear and about hedging risk.
And what about the Fed easing expectations right now priced into the markets? How is that hurting the lending banks in the U.S.? Are we seeing any indications of that?
Yeah, Shery, good question. We're definitely seeing that on this side of the Pacific, particularly the Korean and Australian banks. The outlook is pretty weak. The American banks are defying logic on that at the moment. Margins are healthy, net interest income's healthy, and they're doing that through balance sheet management and pricing. So we're really not seeing the impact of the Fed cuts like you'd expect on those big balance sheet driven banks yet.
What about deal making? Because we know there's been very strong activity in the US in particular, maybe Asia a bit of a laggard, but do we see that sort of investment banking earnings continuing into the latter part of the year?
Yeah, thanks, Annabelle. Look, the guidance from the banks is pipelines are very, very strong. And as I said before, there is confidence returning to the market. The IB revenues and the M&A activity in the US are off the charts in Q3, and year to date they're very, very strong. Again, we're not seeing that in Asia. Macquarie, Nomura and those Asian banks exposed to that theme are going to see a much weaker outlook. M&A volumes very slow in Asia, but very strong in North America, and that's all again about that confidence that I spoke about.
Bloomberg Intelligence senior industry analyst Matt Ingram there with what we're seeing across Wall Street banks in the overnight session. Of course, a very solid quarter when it comes to their earnings. And what we'll be watching in the Japanese trading session will also be those Japanese bank peers. Of course, we have seen the Topix Bank Index running neck and neck with the KBW Bank Index in the United States. And take a look at how the Japanese yen is trading at the moment, sitting firmly at that 150 level, very close to 151 against the U.S. dollar at a time when we have seen a little bit more strength with those unwinds in the Takaichi trade. Remember, we're seeing a lot of political uncertainty with the collapse of the ruling coalition here in Japan. Will Sanae Takaichi become the first female prime minister of Japan is a key question. And those weekend trades that were really predicated on that assumption are being unwound at the moment. We are also watching the offshore yuan, which gained ground in the overnight session, both onshore and offshore. The PBOC strengthening its daily reference rate past the key 7.1 level. And don't forget, we continue to see a weaker U.S. dollar for a second consecutive session. And really, as we keep our eye on trade, on earnings as well, and euro holding at that 116 level, we have seen that gauge higher given the path of the French budget as well. The market opens in Seoul and Tokyo. Next, we'll be following some of those rare earth mineral miners as well, not to mention some of those tech names at the open. This is Bloomberg. This is the Asia. This is the Asia trade. We're counting down to Asia's major market opens, firmly watching miners given the ongoing rare earth spat between the U.S. and China. Also tech stocks, Annabelle, given, of course, when we heard those positive comments from ASML and chip makers really gaining ground in the overnight session.
Yeah, really a strong session for the Philadelphia Semiconductor Index. And as you said, really watching those rare earth stocks that have been under pressure after Bessent essentially is trying to negotiate an extension of the trade truce to also have China pull back on the rare earth export conditions in place. But going into the session today, I mean, it's really about that story around trade tensions between the US and China.
Yeah, where we head, especially in a potential meeting between President Trump and Chinese President Xi Jinping at APEC, will be a key question. But really, it's also about the banking story, right? Because in the overnight session, we got pretty solid earnings coming from Morgan Stanley, Bank of America. In fact, Wall Street, six biggest banks notching a $15 billion gain in stock trading revenue. So you can see right there on the right side how the KBW Bank Index already at a one-week high is really neck and neck with Japan's Topix Bank Index. index. And those are some of the shares that we'll be watching. And you can see gains right at the open, with the Nikkei also gaining 0.9%. We already had some data earlier today showing that the core machine orders, though, were in contraction territory, surprising to the downside, despite the fact that we continue to see a weaker Japanese yen. Yes, a little bit of upside in the overnight session, but still at that 151 level, leading to Katsunobu Kato, the finance minister, talking about the weekend trend, the rapid FX moves that they're watching very closely. Also, JGB's under focus given the firm demand that we saw in the latest bond sale. But take a look at how the Kospi is also trading, because we're watching those semiconductor, those chip makers as well, Samsung, Hynix, SK Hynix as well, given the positive comments coming from ASML. As Bell just mentioned, the Philadelphia Semiconductor Index also at that 1 week high. We're also watching Korea zinc down more than 2%. The ongoing rare earth trade spat between the U.S. and China, of course, a key issue that we'll be watching on the geopolitical side of things, Bell.
Yeah, Korea zinc, though, has been one of the big beneficiaries so far out of those tensions around rare earths, because we saw a run-up over 3 days of around 50% for the stock. So what we're seeing today in the session, though, is also that focus very much on what's happening in treasuries, because, yes, we don't have that many catalysts, given you've got the U.S. shutdown continuing to block any sort of data that can give you really any meaningful indication. But at the same time, the two-year yield sitting around that 3.5% mark. And markets also really just continuing to digest, especially in Asia, these prospects for Fed easing after we had Jay Powell speaking earlier this week and cementing that case in investors' minds that we will see a cut at the upcoming October meeting. But let's get more on the direction for equities from here. Bring in Ben Powell. He's Chief APAC and Middle East Investment Strategist at BlackRock, joining us this morning in Hong Kong. So, Ben, I mean, volatility is definitely back. Not at the levels we saw back in April, of course, but you're still above that 20 level on the VIX. So how do you position and prepare in this sort of environment right now?
Yeah, we think it's, at BlackRock, we think it's a new era for active investing. So I think the kind of 20-year looking back kind of bull market running from the GFC all the way through to COVID, I suppose the right approach was just to be long, maybe levered long and don't touch. And look, there was nothing wrong with that. That worked really, really well. But we're in a totally different macro environment now across every dimension, as you're talking to, Annabelle, geopolitically, economically, much more uncertain, much more fractured. So we at BlackRock think it's just necessary. We might not like it, but it's kind of necessary to move to a much more active approach to try and benefit from that volatility rather than being whipsawed around by it.
And so what does that mean then, shifting more into active? How does that also indicate the positioning you're taking and the sort of sectors you're looking at? And yeah.
That's right. So I think a lens that we like to bring to bear is a much more sort of thematic lens. So we talk about our mega forces, one of which is artificial intelligence. And 2025 has been an interesting kind of example of the importance of staying close to your core convictions. So with hindsight, although to be fair, we did make this call at the time, go back to the sort of the last really busy moment in the trade discussion back in April, that was genuinely a scary moment. Obviously, we were thoughtful around it. But it turns out, if you just stayed close to your AI core conviction, do we really believe that AI is a big deal, money's going to flow and so forth? We did. So we stuck to our overweight in the US equity market. And obviously, as we know here in Asia, that has global implications as well. AI, not just America, but global. So staying close to those core thematics, mega forces as we call them, which inherently is something more of a sector focus, I think.
At a time, though, that we continue to see these concerns about being overstretched when it comes to the AI theme. So how much runway do we have here across Asia?
I think there's more to go. So, look, we are appropriately nervous about the concentration risk, obviously, for the big companies in America. So that, I think, requires us to be more thoughtful across geographies, including here in Asia, and also across asset classes, all the way down to the copper wiring, maybe, that's going to be needed to get the electricity that powers the AI superbrains from where it is created to where it's needed. So I think, the AI thought, we should be cautious, and we're going to need to be a little bit more creative to kind of pick our spots where we want to be exposed to, and obviously trying to seek value where we can. And I think that is beyond the hyperscalers. They dominate the story for good reason. There's nothing wrong with that. But I do think there's much more tailwind to play out here in Asia, given our gearing into them, the relatively more attractive valuation. And I still think global investors are sticking to the US, and that's worked. Nothing wrong with that. But Asia should, of course, continue to benefit as well.
How do you factor in the ongoing trade tensions, especially as we see more across the tech side, rare earths now becoming the focus of the spat?
Look, it's never nice to see a married couple argue in public, right? None of us like to see that. But they are married, right, the US and China. So are they having a serious negotiation about the nature of their economic and other relationship? They definitely are. That's going to continue in this kind of new media landscape that we exist in. Some of that negotiation is going to be done, maybe most of it, kind of in public via social media. That's kind of very different from how we've all been kind of brought up, I guess, over the last decades and even centuries of kind of diplomacy. But that's going to run and run. So I think we need to be very clear and on disaggregating the volatile kind of in public negotiation, which is going to continue, with the underlying reality, which is that they are economically interdependent. They rely on each other, and therefore, frankly, the very idea of decoupling doesn't really make much sense. They are just too interconnected. They're going to have to work it out, and I think that's why the market is obviously watching carefully, and you get some volatility, but ultimately is of the view that they're constrained on both sides on how mean they can be to each other, although the mean rhetoric is very likely to continue.
I noticed that you've got a conviction call for private credit, and I'm interested as well if you paid any attention to Jamie Dimon's comments earlier this week around cockroaches appearing in the private credit market. What do you make of that?
Yeah, of course. We always listen to maybe the greatest banker of our time, Mr. Dimon. So, yeah, very, very interesting. We do think that private credit is going to continue to grow in kind of importance, and what we at BlackRock think is going to happen in the years ahead is this kind of breakdown of high-yield investment grade and private credit is going to kind of lessen, and we're going to have just one asset class called credit, and more investors are going to have exposure kind of across the mix. So, of course, we're very thoughtful around like what's going on with credit risk. And actually, if you look at the bank results, the big banks in the US and kind of globally over the last few days, I'm nervous to say it, but kind of so far so good, right? So we're all watchful. There have been a couple of particular episodes which are worth noting, but if you look at what the big lenders are actually seeing and doing, the results in the last couple of days are actually quite encouraging in that regard.
Yeah, it is. It is interesting because, again, there's so much emphasis on those bank earnings kicking off the season as well. And, of course, we're just at the outset, so we've got a lot more CEOs and a lot more outlooks to get from them as well. But what do you think, then, about the direction for equities? Because you mentioned, of course, that sort of challenging backdrop, but do you actually see further upside from here?
We do. Look, so again, we're nervous, appropriately nervous about the concentration risk. It's kind of astonishing, right? So US equities around 3/4 of MSCI Global. So, and then within that, obviously, the big 4 or 5 or 6 companies are dominant. So it's a very strange, uncomfortable world. As every strategist would always say, we want to diversify. But to answer your question directly, we think the AI raging bull market is likely to continue. And that's driven critically by fundamentals. So again, concentration, sensible discussions can be had around valuation, and there is a sense of euphoria which makes us all nervous, but there is also a sense of astonishing cash flow, earnings and revenue, and for now there continues to be enough kind of positive demand surprise that's driving old-fashioned boring earnings upgrades, which is enough to keep us nervously bullish, I guess I would put it.
I love that, nervously bullish. Ben Powell, good to have you back, Chief APAC and Middle East Investment Strategist at BlackRock. Here in Japan, we're keeping an eye on SoftBank gaining ground at the moment. This after a London judge ruled in favor of SoftBank Group after a trial over hundreds of millions in investor losses tied to a series of trades made by Greensill. Lex Greensill now facing severe criticism from that judge. Liquidity as his firm dried up, and Greensill concealed the true position from Credit Suisse, misleading officials during negotiations, according to the London judge. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how South Korean auto stocks are trading at the moment. Big jumps on speculation that we could see a trade deal with the United States very soon. Of course, Secretary Bessent has said that they're about to finish up negotiations with South Korea. South Korean automakers have faced tariffs of around 25% despite a trade deal that was agreed a couple of months ago because they haven't come to an agreement when it comes to the $350 billion investment fund into the United States. But now with more optimism that we could see finally a trade trade deal between the two sides and then those tariffs being lowered, we're seeing those stocks continuing to rally. Now, when it comes to China-U.S. negotiations, President Trump says that the U.S. is locked in a trade war with Beijing, and without tariffs, the country would be exposed as, quote, nothing. Trump spoke after Treasury Secretary Scott Bessent floated a longer pause on high U.S. levies targeting China to resolve a conflict over critical minerals.
Right now, we are currently in a 90-day roll on the tariffs. So is it possible that we could go to a longer roll in return for a delay? Perhaps. But all that's going to be negotiated in the coming weeks.
Let's bring in Bloomberg Managing Editor Jill Deasy. Jill, we continue to get a little bit of news here and there when it comes to these two sides trying to get to an agreement. But as we head towards the APEC summit and a potential meeting between Trump and Xi Jinping, where are we at in these conversations?
Well, Shery, I think those comments we just heard from Scott Bessent really kind of give us the idea that at least there's some indication that these two sides would like to continue negotiations. I think the idea here that he's floating, we could continue some kind of an extension of the China-U.S. trade truce is really notable here. I think what's really operative there, though, is that he seems to imply that that would be based on whether they can reach any kind of an agreement when it comes to this rare earths issue, which I think we really have to stress here is at the heart of a lot of these negotiations. China controls such an important resource here in these very, very critical minerals used in everything from fighter jets to electric vehicles. Really, really important source for this here. It seems that the U.S. thought that earlier this summer they had agreed to some kind of a relationship with the Chinese where they would actually allow for the continued imports of these critical minerals with fairly minimal export restrictions. But obviously, as we've seen over the last week, China has announced these efforts to curb these exports, leading to a lot of the big tit-for-tat trade tensions rising over the last week. That being said, it seems like, based on what you're hearing from Scott Bessent here, the U.S. and China are trying to reach some kind of a negotiation ahead of this meeting between Trump and Xi, which we still anticipate to be happening at the end of this month. Of course, whether they're able to reach that, I think, we'll have to see, but it does seem like it comes down to reaching some sort of a truce or otherwise agreement on critical minerals like rare earths.
Yeah, and just quickly on that front on rare earths, what happens then if the US also manages to get other G7 nations on board? What's the likelihood of that happening to push back on China?
Right, Val. Well, it does seem like that's something that the G7 finance ministers are at least discussing. Remember, we've got a lot of really important leaders for a lot of these countries that are currently in Washington, D.C. for the IMF World Bank meetings. And that does seem to be something that they're discussing, some kind of a joint sort of statement discouraging China from implementing these kinds of curbs. So that's something that maybe the U.S. can get the rest of the G7 to unite around. Now, whether that actually sort of changes things or puts pressure on China, I think remains open to be seen, because at the end of the day, the control of rare earths is really China's key point of leverage in the U.S.-China trade relationship here. So I think it's a card that they're going to hold on to, and we'll see how that plays over the coming weeks.
Bloomberg Managing Editor Jill Deasy is there. Take a look at how Japanese assets are trading at the moment, as we're seeing a little bit more upside on the Japanese yen, still around that 150 level against the greenback. The Nikkei also gaining ground for a second consecutive session. All of this, of course, as we keep our eyes on JGBs after we saw firm demand at Japan's latest bond sale, all to do, of course, with the uncertainty over the political scenario here in Japan. The Japanese opposition party now saying that it will meet today with LDP leader Sanae Takaichi as she seeks support in a parliamentary vote for prime minister. Is the latest in a flurry of political negotiations following the shock collapse last week of the ruling coalition. Let's bring in economics and government reporter Yoshiaki Nohara. Yoshiaki, so we're expecting that meeting with the Ishin Innovation Party here in Japan, but also the potential that perhaps we could see opposition parties getting together and putting forward a candidate that could win over Sanae Takaichi.
Right. It's the situation is very tenuous and fluid. The two tracks of negotiations are happening. One is as you mentioned, Shery, the negotiation between Takaichi and Ishin, the co-leader with Fujita, and also at the same time, the three-way meeting among Ishin and the two other opposition parties are happening. And we don't know yet which side will be able to make a consensus on who is going to be the prime minister for Japan next time.
We've got a special diet session that's expected to be convened next week, early in the week. Do we get a prime minister decided by then, or settling on one candidate, or how long does this sort of political gridlock seem to last as well, or uncertainty last?
Annabelle, that's a good question. You have to keep in mind that there's a pretty good reason for Japan to decide on the new leader, because the following week we're expecting a series of diplomatic events, including the expected visit of the U.S. President Trump to Japan. So I think all the leaders, policymakers agree that they should have be able to make a decision by the end of by early next week, so that we have a new leader facing these important diplomatic obligations.
Yoshi, thanks so much for joining us this morning. That was Bloomberg's Yoshiaki Nahara there. And let's get the other top global headlines that we're following this morning, because President Trump says he's authorized the CIA to take covert action in Venezuela to stem what he says is the flow of drugs and illegal migrants into the U.S. He was responding to questions about a New York Times report which says the agency would be enabled to carry out lethal operations in Venezuela. The U.S. has been targeting what it says are drug smuggling boats in the southern Caribbean since the start of September. The US FCC is moving to block Hong Kong-based phone company HKT from domestic telecom networks, citing national security concerns. In a statement, FCC Chairman Brendan Carr says the Commission will continue to safeguard US networks against penetration from foreign adversaries like China. The carrier is controlled by Hong Kong-listed PCCW, whose largest shareholder is billionaire Richard Lee. President Trump says Indian Prime Minister Narendra Modi has promised to halt purchases of Russian oil. Trump says Modi made the commitment to him during a Wednesday conversation, but didn't describe an exact timeline for India's curtailment. Washington's repeatedly criticized New Delhi over its Russian oil buying, saying it was fueling the war on Ukraine.
If India doesn't buy oil, it makes it much easier. And they're not going to buy. They assured me they will, within a short period of time, they will not be buying oil from Russia. And they'll go back to Russia after the war's over.
We'll have more ahead on the Asia trade. This is Bloomberg.
At the moment, we think we are probably close to balance in terms of the output gap. But it's very hard to judge these things, and ultimately, inflation is what tells you, whether or not you've got an output gap.
RBA Governor Michelle Bullock speaking at the Nomura Research Forum in Washington. As we're getting breaking news out of Australia right now, the September jobs numbers coming in at gains of 14,900 month on month. Now, the estimate was for around 20,000. And remember, the previous month, we actually had a contraction in these jobs numbers, famously volatile set of data. But the unemployment rate rising to 4.5% in Australia, which is a bigger gain than what was expected by economists. So we'll be factoring all of this in as we continue to watch the Australia bond space as well. We had a little bit of pressure early in the session ahead of these numbers. The unemployment rate rising to 4.5% from 4.2% in the previous month, Belle.
Yeah, certainly going to be very closely watched, of course, at the RBA, those figures. But let's also shift to earnings, because we're continuing to see the season really get underway. And ASML was the very big focus in the session overnight. It certainly played into what we saw in terms of chip stocks broadly. But in terms of the figures from the company itself, Dutch firm, of course, but posting $5.4 billion in bookings for the third quarter. That was quite far ahead of what analysts had been expecting of 4.9 billion euros. I'm talking euros here, apologies, but that is 6.5 $2.3 billion in bookings for that period, 3 months ending September. So good signs around demand. Of course, ASML has the most advanced chip making equipment on the market. It's a key part of the semiconductor supply chain, and it tells us as well that any questions around a bubble, at least from the demand side, from the infrastructure side, it does appear to be holding up for now, Shery.
Yeah, and yet we continue to see those concerns, right, from the likes of big Wall Street banks, Citigroup's CFO, Goldman Sachs, David Solomon also warning of frothy and overvaluation in this sector. And this at a time when we're also seeing the latest from analysts polled 54% on the Bank of America survey saying that an AI bubble is viewed as the biggest tail risk. But still, you talked about the optimism overall in this sector, right? And the good numbers are we saw from ASML. Well, we had blowout October numbers also for Samsung, which is also backing the bullish case not only for Korean equities with their biggest quarterly profit in more than 3 years, but perhaps for the likes of TSMC. And of course, we do get those earnings today.
Yeah, that's right. And then TSMC, of course, the quirk of companies that are listed in Taiwan is you get the monthly sales figures for companies that are listed on the Taiwan Stock Exchange. So going into the numbers today, we're expecting them to be strong because we've seen that coming across in the sales figures July, August, September. But to your point around this AI demand and the question whether we're seeing a bubble, is it going to be bursting? Is it going to be deflating slowly? That's going to put a lot of focus what we get in the earnings call as well.
Joining us now is Randy Abrams, head of Taiwan research at UBS Investment Bank. Randy, good to have you with us. So this concern about an AI bubble, what are your expectations for the industry at a time when it's all about potential overvaluation in U.S. equities, but at the same time, perhaps more leeway across Asia? What are your thoughts?
Yeah, good. No, thank you. Yes, we kick off results today, and you were mentioning earlier about ASML. I do expect TSMC to follow in terms of a similar tone. They have the dominant supply of AI chips, and we've seen the cues already. The major internet companies have already come out with aggressive capex into next year. We've seen the big OpenAI contracts, and a few of the worries TSMC had earlier in the year, tariff risks, less related to AI, but on traditional tech, that's more stable. We've also seen Taiwan dollar stabilize. So I think in terms of all the key metrics, we still get that tone kicking off that next year is going to be a good year, aside from all these bubble talks, which we can always address.
When it comes to Taiwanese technology stocks, though, they are trading above the 12-month average, for example, when it comes to their valuation. So is that a concern about the leeway that they have going forward? And where should we put our eyes on as we get the TSMC results today?
Yeah, Taiwan is trading like our UBS coverage off of next year 19 times. I would say traditional average about 15 times, but I would compare it. We're elevated, but that's normally what we'll see in an upcycle when it looks like we're still in the first part of the upcycle. You start to derate later, like which we saw later part of 21, 22. Right now, though, I think the signs were not yet at that bubble level. Late 90s, we weren't talking about earnings multiple. Most of the valuation was off price to sales, price to clicks. So we haven't had that melt up. I think the other, when we've done our investor meetings, investors actually have plenty of, you could say, angst or are anxious about these circular deals. They're still watching for the ROI. So in that state, that's keeping us from the exuberance, from the melt up, where stocks I'd say for a lot of the Taiwan stocks, we're not really at that territory that these are inflated if we stay in a period of higher growth the next couple of years.
Yeah, so Randy, as you said, you're expecting pretty strong figures later today, and we've seen that reflected as well in the monthly sales figures. But what's going to be most important for you in the earnings call as well?
Yeah, okay. For the earnings call, I'd just say normally the October quarter is slightly light because they usually hold off 2026 outlook for growth, for CapEx, for how margins will be next year. But you do get the signals, and I think the qualitative signals will be, hey, they see those same messages about desire to spend. Usually it's a careful approach. They'll build a big mega fab and then phase it in installments. They'll focus on reuse of equipment from one node to the next to avoid, you could say, over-investing. But I think they'll say, hey, we're on the front foot. Part of that, I think, when we look back to this AI, we still have the visionaries driving the CapEx decisions. It's not yet the CFOs. I think when we start to talk, do we slow down? That would be if growth returns, if those aren't coming through. At this stage, though, I think what's allowing them to, most of the guys spending, they're still spending out of operating cash flow. So they're not having to necessarily leverage up to do this wave of spending. We don't see getting there until 1 to 2 years later.
What do you think then about their plans also for the US market? Because this is something that could have actually weighed on margins as well. So we had local media reporting just a couple of weeks ago that they were looking to speed up construction of a plant in Arizona. Do you think, given the political pressure on Taiwan, that we're going to get more commentary on that front as well?
Yeah, I think their commentary will be they will go as fast as they can. There is, you could say, the logistics and the physical limits, even some constraints of how many people they can have on site. The feedback we're getting, as fast as they finish the second phase of the fab, they would start on phase 3. But it still means on that project and that scale, it takes about 2 years to really go through each of these phases to get up the capacity. So I think their tone will be, yes, we're on the front foot, we're pulling in because customers have that interest in more of the supply chain. Our take, because we've gotten questions, by 2930, our team feedback, actually a lot of the capacity they're putting in, they could meet that U.S. goal. Over half of the production, at least for U.S. chips, 1 to 2 years behind the advanced node, could be supplied out of the U.S. to U.S. customers, given their expansion plan. But I think their message will be, we're expanding as fast as we can, but there are some limits just in terms of how quick it takes to construct these fabs.
Brandy, when it comes to Apple, for example, we continue to see news about these high-profile executive exits from the company because of its issues with AI development. When you talk about these customers, especially for TSMC and Apple's, for example, A19 products, NVIDIA's Blackwell chips as well, do you see any changes in these customers and how they operate in this big AI race that could be consequential for TSMC going forward?
Yeah, I'd say there's been a flip over where a few years ago, smartphone was the dominant, like 40-50% of revenue. The compute and AI, at that point, high performance compute, 30% of revenue. It's flipped. So in one way, you're seeing much bigger focus on the high performance compute. Smartphone, though, is still important. And at least what we're seeing from all the smartphone, they're still pushing the advanced node because there's competition between Apple and the Android camp. And there's still a desire to bring on some of those on-device AI compute. Not, I'd say, to be fair, hasn't yet driven hardware, but as long as they do push that AI angle because of competition on device, they are migrating to the next node. So for TSMC, units don't really grow, but they're actually growing by selling a more expensive wafer on an advanced node. So even those mature application, aside from AI, like smartphone, still is a mild growth driver for the company. But again, the focus is going to be more on the AI, high-performance computing growing much faster.
Randy Abrams, good to have you with us, head of Taiwan research at UBS Investment Bank, of course, as we head towards that TSMC earnings today. A reminder to tune into Bloomberg Tech Asia for more on how shifting geopolitical tensions are impacting the chip industry. That's coming up at 8:30 a.m. Hong Kong time on Friday, October 24th on Bloomberg Television, 8:30 p.m. Thursday in New York. Subscribers can also watch on the terminal using our TV Go function. And when it comes to chip makers, we're also watching chip maker material makers or chips materials makers like Texan Photomask. It started trading on the Tokyo Stock Exchange today, and you can see that huge rally of 15%, at one point 19% gain from its IPO price. We know that the IPO happened last week, and it was worth $1 billion US. They sold 3,000 yen a piece. The sale attracted global investors such as Qatar Investment Authority. It trailed only JX Advanced Metals IPO in terms of scale in Japan in 2025, and really shows the appetite for new listings here in Japan after, of course, the collapse of the ruling coalition here rattled markets. But it's also really about, of course, the exuberance around chip making and this stock, semiconductor material maker Bessent in Japan. This is Bloomberg.
Taking a look at gold prices this morning because it just continues to rally. We've seen gold just notching record after record, but this morning trading above that 4,200 mark. It is that story around trade frictions playing into it, but also expectations that we're going to see further Fed easing that are certainly playing into the picture as well, Shery.
Yeah, and we continue to see a little bit more upside for the Japanese yen, perhaps those safe haven trades, but also the fact that we're seeing an unwind in the Takaichi trades, given the political uncertainty and whether or not she will become the first female prime minister of Japan. So we're seeing the yen trading at that 151 level against the U.S. dollar. We're seeing Nikkei stocks also gaining for a second session. As we continue to watch JGBs as well, of course, we were watching that the firm demand at the latest bond sale, which was the first of Japanese government bonds since the ruling coalition collapsed. Let's bring in our senior FX and rates reporter Ruth Carson with the latest on that, because really it was that JGB auction that we were watching as a litmus test for demand in the JGB space after the collapse and the political turmoil here of the ruling coalition.
Absolutely. Global traders, no matter where you were definitely keeping an eye on the JGB auction result. First of all, it is an ultra-long bond, so we know that there's been pressure there this year, and the fact that it was also the first auction since the coalition collapsed. So there's plenty riding on it. And you know what? For the few JGB bulls out there, it was actually good news. The, bid to cover ratio actually came in. There was a fairly strong demand for the securities, which kind of suggests that, yields are at sufficiently high levels now to entice some of the buyers that have been spooked earlier this year back into the market. Still remains to be seen, though, as to whether this trend continue, considering yields are still lingering at multi-year highs.
Yeah, and you've seen sort of that reaction in the Japanese yen, but at the same time holding around 150, 151. What happens from here, do you think?
Yeah, the yen was probably the clearest expression of macro traders' angst, if you can call it that, following the coalition collapse and all the political chaos that we've seen in Tokyo. So yes, dollar yen is currently between 150 to 151 or a bit above, depending on the day. The expectation is still for a stronger yen by year end because the Bank of Japan is expected to hike interest rates, but that path there is unlikely to be a straight line. It's going to be beholden to risk sentiment, obviously the debasement trade as well, and definitely local politics as well.
That was our senior FX and rates reporter, Ruth Carson there. Thanks very much for your time. And sticking with, of course, trade tensions that have been playing into the yen dynamics, well, the return of those as well is certainly putting Asia's stock market rally at risk. That's as investors brace for fresh fallout. Let's get more with our Asia equities reporter, Winnie Xu, joining us. And, of course, we count down to the open of trade, about 45 minutes away from the open in Hong Kong and mainland China. How do we trade in this market? What is the sentiment? What are you hearing from investors? Where do we go from here?
Yeah, so I think cautious optimism is probably that phrase to sum up what's going on right now, because the cautious part is really coming as we see Asian stocks under a bit of pressure. The upside is really capped right now. We are seeing it underperforming global gauge since Trump announced this 100% tariff on China. And when you look at kind of where the index are trading, we've got HS Tech actually entered a correction earlier this week, and volatility is also rising. So it really is that ongoing U.S.-China tensions in and also the political instability in Japan weighing on this region. But the optimism is coming around. How investors that we are speaking to are expecting this just to be more of a negotiation tactic, because when you look at the timing, it's interesting coming ahead of this expected meeting between Trump and Xi. And when we talk to our buy-side fund managers, they're not really tweaking allocations at this point because they expect this ongoing tension to eventually ease. But until we see China backing off from that curbs or that rare earth restriction, and also U.S. backing off from that 100% tariff, there is likely to still be some uncertainty in the markets.
Winnie, how much will the AI and tech exuberance help?
Yeah, so that is one key catalyst that we are watching, especially with earnings underway right now. We got that ASML's the better than expected earnings, and that really helped Asian chip makers yesterday. So likely that optimism is going to be something that investors would want to hang on to. And we also have TSMC's earnings coming up today. So again, that is most likely going to be the driver's seat right now, but still a bit of a cautious in terms of just how this macro environment is playing out. And I think overall, when you look at how Asian stocks have been trading so far this week, it's still up some 0.3%. So that is, so the cautious mood is there, but overall, it seems like markets are still quite calm.
All right, Winnie, thanks for joining us. That was our Bloomberg Asia equities reporter, Winnie Xu, on really what is a very uncertain outlook for the US-China relationship. But on that note, JPMorgan says it intends to continue thoughtfully partnering with China despite the latest flare-up in tensions between Beijing and Washington. Speaking exclusively to Bloomberg, the co-head of JPMorgan's commercial and investment bank also told us more about the efforts to expand their global footprint.
Look, international has always been extremely important to us, particularly in the CIB, and we see tons of opportunity around the globe. I mean, I would say in terms of standouts, it would be the Middle East and Asia, particularly Japan, Australia, Southeast Asia. But there's really opportunity for us to grow everywhere, and we're really focused on it. I think historically, as a big U.S. bank, we've really benefited from the size and scale of our footprint in the U.S. And we're obviously in the center of both inbound and outbound investment out of the U.S. But we're focusing really hard on trying to build those non-U.S. corridors, Middle East to Europe, Middle East to Asia, Asia to Latin America. If I think about our future, getting that right, and we're already good in those places, but really getting it right is super important for us.
Is it awkward to have a presence in China at the same time that you're investing in strategically important companies in the U.S.?
No, not in my opinion. I mean, we're a global bank, and there are plenty of our customers, certainly even U.S. customers of significance, they're doing business in China. Our job is to be there for them. So we're going to continue to do that. I mean, we're investing in the very long term everywhere, China included. Obviously, we're cautious. Obviously, we pay attention to geopolitics and the economics on the ground. But, you know, while there could be a worst case scenario, more than likely there's a path where we continue to be a partner with China. It might be very different than the past, but I'm comfortable we're doing it thoughtfully, and we're going to continue doing what we're doing now.
JPMorgan on the trade negotiations with China. As we're also watching trade negotiations with South Korea. We're now hearing from the policy chief in South Korea, Kim Young-bom, saying that the talks with the United States are positive. Of course, we had heard from Secretary Scott Bessent that the U.S. is about to finish up negotiations with Seoul, which has sent those automakers across South Korea higher. Hyundai Motors gaining more than 8% at the moment. This is Bloomberg. Take a look at live pictures coming out of Peru because thousands of Peruvians are taken to the streets to protest the new administration of President Shery in the capital, Lima. And you can see the police force right there. The protests mark an early test for this new administration. Remember, only in place for less than a week. And Peru, very well known for going through cycles of presidents. It's had 8 leaders in the past decade, Bell. So we continue to watch for this political turmoil unfolding and potentially more violence in the coming days.
Yeah, as you said, Peruvians protesting a new president just days after taking office. But time to check as well some of the stocks to watch when markets open in Taiwan, because it's all about TSMC in this session. It's going to be reporting earnings later today. We've already had indications coming out of the monthly sales figures that these are going to be strong quarterly numbers. It is also a very important barometer, though, because we've got lots of talk around AI bubble forming. Are we in a bubble? Is it likely to burst? What would be the catalyst for that? But against the backdrop of what's been strong ASML earnings, what was strong Samsung earnings on the HBM front, perhaps last week as well, or preliminary earnings from Samsung, there's lots of different indicators to say, again, that we should see these figures holding up. The earnings call going to be really closely watched as well. Any speed up of construction of the plant in Arizona, their ramp up as well of N2, what they're doing with overall demand from key customers. Very close watch on this company today, Shery.
Yeah, with the stock price to perfection, those earnings very important at a time when we had the Philadelphia Semiconductor Index also rallying in the overnight session because of positive commentary coming from ASML. So you can see U.S. futures at the moment not doing much. But this after the S&P 500 really rose in a very volatile session overnight. We're watching TAIEX futures ahead of those TSMC earnings up 0.8%. And you can see China A50 futures to the downside of 0.2% as we continue to watch the China-U.S. trade negotiations and everything to do with rare earths. That's it from the Asia trade. Our markets coverage continues. The China show is next. This is Bloomberg.